Welcome to today's edition of What's on Tap. I'm Don Tapscott.
And I'm Alex Tapscott.
And we are the Tapscotts. And we're talking about blockchain, crypto, and beyond. Alex, it's been a big week. I mean, I'm just looking at some of the headlines that we've been following. Fidelity launched a new institutional crypto data analytics platform. Dapper Labs, Coinbase Ventures, joined a $65 million investment in an avatar startup, Genies. Coindesk A16Z to launch a $1 billion crypto venture fund. PayPal, crypto partner Paxos, raised $300 million. Ethereum is on fuego, soaring past $3,000 high. We should come back to that. A lot of stuff going on ETFs and so on. The ASX could launch Australia's first crypto ETF by the end of the year. Sotheby's to accept crypto as payment for the Banksy artwork. The S&P goes live with Bitcoin, Ethereum, crypto indices. Hey, the eBay CEO, I don't know if you saw that, hinted at crypto payments and NFT sales. Go buy your NFT on eBay. So, Alex, it goes on. Why don't I throw out a few, and you give us your 1 minute hot take, okay? Here we go. Galaxy Digital bought BitGo. That's a leading custodian. They paid $1.2 billion, and the deal was announced yesterday, I guess, or today, and it'll close by year end. So, what's your take on this? And why are banks such as BNY Mellon, Chase, etc., what are they doing in the digital asset custody space?
Yeah, well, I think the deal is the sort of biggest data point yet that custody is a very big business, obviously, but it's also something that's extremely valuable. BitGo is one of the top, 4 or 5 digital asset custodians in the US. There are other names that are household names like Coinbase and Gemini and others. And $1.2 billion is, it's a lot of money. Galaxy Digital is a big public company that trades in Toronto and has been an acquirer of various kinds of crypto businesses. The bigger picture here, though, I think, is that this is evidence that crypto custody and digital asset custody more generally is going to be an increasingly important part of the financial industry. You mentioned a couple of firms, BNY Mellon, Chase Manhattan. We saw US Bank all announce that they're either building their own or going to white label some sort of custody offering. That's following the decision by the US Bank regulator, the Office of the Comptroller of the Currency, to basically give permission to banks to do this. So I think there's sort of an arms race going on here to basically acquire the technology in order to do this. And it's not just for crypto, because our view, of course, is that in a matter of years, most financial assets are going to require a similar sort of technology back end. So if you're a bank leader today and you're not thinking seriously about digital custody of digital assets, now's the time to get moving.
All right. CNBC reported today that NYDIG, crypto firm, announced that it was partnering with hundreds of U.S. banks to enable Bitcoin buying and selling. Again, which banks are not paying attention to this? And what does it mean for digital asset adoption? And, ETFs, big deal. How will this impact them?
Yeah, anything that makes it easier to own Bitcoin is going to be good for Bitcoin. And any bank that's making this possible, I think, is going to see themselves reap some serious rewards. Right now, most users are buying crypto through cryptocurrency exchanges or through apps like Robinhood, or they're getting exposure through, trusts and, in Canada, ETFs. Being able to buy Bitcoin directly would provide yet another option for investors and users as well to get access to this technology and to get access to this asset class. My expectation is that, in very short order, every bank will have some sort of offering, similarly to what we talked about earlier on the custody side. It just is such a huge missed opportunity to not have a presence either in the custody or in the trading of these digital assets. And once again, this is the first step on a long journey where most financial assets will be digital bearer assets like Bitcoin. So building this infrastructure is not just good for the short term, it's good for the long term as well.
All right. Um, Regulation, huge challenge. In our research around the world, many, not just technology companies, but enterprises are saying that the regulatory unclarity or bad regulation is and often the key impediment to moving the whole blockchain revolution forward. So Hester Pierce, of course, is a breath of fresh air, commissioner for the SEC, said on Thursday that Gary Gensler's appointment to lead the SEC would be good for crypto. What's your take on that?
Yeah, Hester Pierce has until now been an outspoken part of the Securities and Exchange Commission as a very vocal advocate for crypto assets and for blockchain. So much so that she earned the moniker Crypto Mom, along with Chris Giancarlo, who at the
Crypto
time
dad.
headed the CFTC, and he was Crypto Dad.
Yeah.
The relationship between mom and dad was strictly platonic, is what I understand. But they both sort of leaned into those reputations, which was great. But now we're seeing a big shift at the SEC. So Gary Gensler was confirmed by the Senate a couple of weeks ago to be the chairman of the SEC. And he's someone we know is, really interested in this stuff. He taught a course at MIT on blockchain. Part of the syllabus was the Bitcoin white paper. So this is someone who's coming at it with a real wealth of knowledge and experience. Now, what that means in terms of specific regulations, hard to say. I think a lot of people expect an ETF to be approved in the US sometime soon, for maybe there to be some more clarity around how the SEC looks at crypto assets beyond Bitcoin, a framework even for token offerings, which would sort of clear up some confusion there. So all of this stuff could be very positive. Certainly, it's a long way from where we were just a few short years ago.
Big developments around remittances. Blockchain revolution, of course, we talked about this, $1 trillion industry. And where people are getting ripped off. Why should it cost, a housekeeper in Toronto 10 to 20% to send money to her mom in the Philippines? And why does it take 4 to 7 days? But there's a discussion, lots of discussion this week, including from restofworld.org, about that the most recent adopters of Bitcoin are working class people using it for remittances. Is this actually happening?
Yeah, I mean, this has been one of the promises of cryptocurrencies, and it's something that the trend has been very positive over time. But we always, we're starting from a very small base. It's not like everyone who lives in Canada and the US is using Bitcoin to send money home to their family. It's still a tiny fraction of the people doing that, but that is starting to change. What we've seen a lot in the last couple of years is that Bitcoin adoption specifically has really taken off in parts of the global south where the banking system is underdeveloped, where the local currency might be unstable, and where there's just a lot of friction and corruption in the economy. Bitcoin has sort of acted as a salvation. And I think that this is part of that trend. As it becomes easier and easier for individuals to get access to this asset class, for the interfaces to become simple and frictionless to use, I do believe that we will see this adoption accelerate. And that, frankly, is a very important thing because, Bitcoin and blockchain are going to transform industries, and lots of fortunes are being made by entrepreneurs and early adopters and speculators. But unless this technology touches the rest of the world, I think its promise will end up going unfulfilled. So these kinds of things are obviously very positive to see.
Great. And on the regulatory environment, I will remind people of the big report that we wrote for the Biden-Harris administration on technology strategy in the United States. And one of the sessions was that we argued, or one of the sections is we argued that we need to rethink a lot of the regulatory environment. And I'd encourage people to go look at that report. It's at blockchainresearchinstitute.org. But we outlined a new regulatory framework, and I'm not going to go through it all, but just some of the things we said are needed, that we need guidance on digital tokens. We need to have clarification of the custody of digital assets. We need consistent statutory treatment of smart contracts. There's a need for accounting standards. There's a big clarification required in tax guidance as different entities will
Yeah.
look at this stuff differently. So maybe there's linking the appointment of Gary Gensler with what's going on in remittances. Maybe there's an opportunity to change this regulatory environment for the better.
Yeah, absolutely. Well, one of the big initiatives I know that has been a focus at the BRI has been central bank digital currencies.
Yeah.
And that was something that was also part of the recommendations to the Biden administration. Now, the BRI happens to have a very close collaborator who I mentioned earlier, Chris Giancarlo, who formerly was the chairman of the Commodity Futures Trading Commission, one of the biggest financial regulators in the world, and now is back in private practice, but leading a whole bunch of really exciting initiatives, including the Digital Dollar Project. So maybe some fortuitous timing around the launch of our report is that they just announced a whole new initiative, a number of different pilot projects that they are working closely with enterprise and government to achieve. I'd love to hear your take on that.
Yeah, well, a lot of people say that that the digital dollar is a bad idea because of the way it's being implemented in China. And as we've always done, going back to blockchain revolution, when someone raises an objection to something, we always try and put it in box number one or box number two. Number one being, does this mean this whole thing is a bad idea? Or does it mean that there are implementation challenges? And there's a strong case to be made that a central bank cryptocurrency could be a great thing. It could enable regulators to have a lighter touch on regulation because it'd be greater transparency. And sunlight is the best disinfectant for capital markets and lots of other things. But also, it would provide central bankers with the ability to see what's happening when they say you increase the money supply. What happens with the funds? Are people saving it? Are they investing more? Are they spending money on certain things and so on? And overall, it could be a very powerful tool if used appropriately and if there were appropriate privacy guarantees. As Chris Giancarlo makes the case very strongly that this is a strategic and an interest of national importance to the United States, because as China rolls ahead with its CBDC project called DCEP, then they're rolling it out across Vietnam and Southeast Asia into Africa, across One Belt, One Road, linking Rotterdam and Hong Kong. And there's a real scenario whereby this currency becomes the currency of record, replacing the US dollar. So lots of big issues raised around that as well. Should we have a global currency that's different than a national currency and so on? Yeah. It's a big topic, but you want to just give a fast take on it?
Yeah, sure. Well, I would agree with Chris that it's in the national interest of the U.S. to ensure that the U.S. stays on top of financial innovation and that it does what it can to make sure the U.S. dollar keeps its place as reserve currency. I'm not sure that's necessarily good for everybody, but it is certainly good for the U.S. We're Canadians, and the U.S. is our largest trading partner, so it's an arrangement that frankly works pretty well for us too. I think for this to succeed, it needs to be implemented in the wild. And this is the question that I have about these kinds of pilot projects. I think that they're very important, and I think with government buy-in, they could instantly become transformational. And we're seeing that in China right now. But in the meantime, the private sector has sort of picked up the baton here and run with it. I mean, the value of US dollar-based stablecoins is almost $100 billion today from $1 billion maybe 3 years ago. Just in the past month, I think it's gone from 60 to over $85 billion. So this is an area of tremendous growth. US dollar-based stablecoins are now being used beyond just crypto speculation. We're seeing big companies like Visa announcing integrations with leading stablecoins like USDC. And it's possible that by the time these pilot projects have reached the implementation stage, that they've already been lapped, so to speak, by private sector initiatives. And there's not necessarily anything wrong with that. I mean, Chris is a man who has had success in government and in the private sector, and he sees government working hand in glove with the private sector to make this successful. So we'll see how this all shakes out. But I do think that the initiative is an incredibly worthy one, that they've brought on some tremendous partners, and that finally sort of US dollar digital asset innovation is really being kicked into high gear. And I think overall, that's a very good thing.
Now, many people in the traditional community-based cryptocurrency world, like Bitcoin, don't think much of central bank digital currencies. And lots of people say these will completely wipe out Bitcoin. And in fact, that's one of the arguments that some government policymakers make around why we need to embrace CBDCs, is because Bitcoin threatens the fiat currency of countries like the United States, the US dollar. What do you think of that?
Yeah, I think that fear is totally misplaced. I think, if anything, if the US really truly created a digital currency, a cryptocurrency that had many of the same properties as other cryptocurrencies, like it used some sort of like mining or consensus algorithm, it required people to have digital wallets and use private keys and all this other stuff. And I'm not sure that's going to happen, by the way. I think it's probably going to be some sort of hybrid. But if anything like that were to actually occur, it would instantly onboard hundreds of millions, if not billions, of people into the world of crypto assets, which would allow them to transact more easily in Bitcoin and other, potential holdings. I think that nothing could be further from Bitcoin than a central bank digital currency. We already have central bank currencies called dollars. People spend them online, offline. It has no impact on Bitcoin. Currencies issued by governments are designed to depreciate in value. The point is for them to erode. Because if they erode, then you have to spend them, right? If you hold dollars in your bank account after 50 years, they'll be worth 2 cents on the dollar for what you paid for them. So you must spend them. That is a totally different value proposition than Bitcoin. Bitcoin is a scarce asset with a declining production curve that is viewed increasingly as a good store of value and has a proven track record as such. So the two are totally unrelated. And I welcome innovation in both areas, quite honestly. I think the concerns of the Bitcoiners is totally overblown.
Why don't we end with a quick discussion about Ethereum? Let's start with you. It cracked 3,000, blew through $3,000, reaching all-time highs.
Yeah.
Why don't we look at this whole sort of digital asset marketplace right now? Back in the day, we used to talk about the flippening, where Ethereum could become more valuable than Bitcoin. We're a long way off from that. I think Ethereum's around a third of the value of Bitcoin today. But what's going on with Ethereum? Why is it doing so well?
Well, Ethereum is now entering a second stage of growth. So the first stage was defined mostly by, I think, speculation in the token and token projects launched on top of Ethereum. But now what we're actually seeing is Ethereum being used for what it was designed to be used for, which is as a medium of exchange in applications that run on the network. So the main kinds of applications are, areas around decentralized finance, so decentralized, payments, savings, loans, lending, et cetera, and NFTs, crypto collectibles, and in creative industries and elsewhere. In the stablecoin universe, where many of the largest stablecoins are growing rapidly on the Ethereum network. They're growing on other networks, but particularly on the Ethereum network. And all of this is creating demand for users who need Ethereum to access these products and services. That's very different from people just buying it with the expectation or the hope that it's going to go up in value. Now, having said that, there are plenty of people who are buying it for that exact purpose, who have no intention of spending it in an app or to use it for any particular use. But the mix is changing. And to me, that's really exciting. The second reason is I think that there's some broad-based institutional investor adoption happening in Ether. I mean, buying Ether is like buying a piece of, the internet in the early days. Just the difference is that there today are a few internets competing with each other. Not all are going to be valuable. So you're seeing lots of investors saying this could be the next sort of FANG stock, basically. This is worth 300 billion, but maybe it could be as valuable as Apple or larger if then future applications of the internet economy run on this network. The network itself is going to be massively valuable. And that's a self-fulfilling prophecy, because once more investors buy into it, others get more comfortable. And in Canada, we've seen a couple of approvals for ETFs. And in the US, some early examples of institutional investors announcing investments. That's not to say there aren't dozens behind them who are just doing so in secret. So it's a self-fulfilling prophecy. It's a combination of investment capital, but also utility. And that is quite a potent mix and is helping to really support the value of the tokens. As for the flippening, I think the flippening is something that people who view this as an us versus them fight, they're the ones who are kind of preoccupied with this. I don't think of Ethereum and Bitcoin as innately competitive with one another. I think, frankly, serving different kinds of use cases. I think Bitcoin has it's decentralized. It has a very clearly defined, supply curve. Its enormous computing resource secures the network, and so it's a great store of value. It's great as a medium of exchange for large dollar transactions. But it's not really useful so far for much beyond that. Ethereum is different. It's a bit of a looser protocol in terms of its governance, but it's more useful for these kinds of applications. So I just see those as being two very different use cases, for the assets. And I think that they're both going to thrive together. I do think that over time, Bitcoin's share overall of the crypto asset ecosystem will decline. Not because Bitcoin is declining, just because others are growing faster. And this has gone through, periods of where Bitcoin has declined a lot and then bounced back. But the long-term trend since the beginning, since the genesis, so to speak, of crypto, has been for Bitcoin's dominance to decline steadily over time. And to me, that is a sign of a healthy ecosystem and the sign of innovation happening all around this space, and not the sign of any sort of failing on Bitcoin's behalf.
And thank you. I'll remind our audience that everything we say here is not to be construed as investment advice.
Yes, needless to say. Yeah.
And there's probably a law here about functionality. Maybe it's the long-term, the value of a digital platform will correlate with the functionality of the platform. So if you have a platform like, say, Dogecoin, which is hard to say what its functionality is, that long-term, that may decline in value compared to something like Ethereum, which does have a lot of value. And there are lots of other platforms that we've talked about, Polkadot and Cosmos and so on.
Well, that might be true about Doge in the long term, but in the short term, it's more valuable than FedEx. So clearly something is working for Dogecoin at the moment. But to respond to that, look, there was a thesis in the last crypto cycle called the FAT protocol idea, basically. And the idea was pretty simple. During the internet, we had this protocol called the internet, and all the value was created by corporations that built applications on top of the internet. So the internet was not monetizable in the same way that Apple, like Google as search, or Amazon as cloud services, or these other companies could, create huge value. And the thesis was, well, this time around, maybe it's the protocol itself that would be really valuable, and the application layer won't be so valuable. And that was sort of treated as gospel in 2017. And then all of a sudden, it seemed kind of like a stupid idea, because we had a boom and a bust in the very early days of crypto, and people were like, well, maybe these protocols aren't that valuable after all. It turns out that there may have been actually quite a lot of truth to that. The fact of the matter is that Ether is the dominant asset inside of these applications that run on top of Ether. And the total value of every DeFi protocol combined that's running on the Ethereum network is tiny compared to the value of the Ethereum network itself. And that is an example of FAT protocol in action. Now, the question remains that in 5 years or 10 years, maybe there are going to be lending protocols on Ethereum that are bigger than JP Morgan. That very well might be the case. There's already $70 billion of total value locked in DeFi protocol projects already. And that's from, a few billion last year. So this growth curve is hard to predict. But at least for now, the FAT protocol people seem to be vindicated a little bit.
Yeah, it was like the Internet of Information was in the public domain, and the web. Thank you, Tim Berners-Lee, Surf, and others. But the internet of value, you actually get to own it. The underlying protocols. I think over time that as an entire economy becomes built on this, I'm not talking about a crypto economy, I'm talking about the economy, that inexorably, that you mentioned FedEx, companies like FedEx will run on these platforms. And ultimately, that's where the greatest value is to be achieved. But it speaks to a lot of things. One of them being we're in the very early stages here, but for now, on the platforms themselves, functionality is going to correlate with value. I remember I had a math teacher named Mr. Farlinger, and he drove an old car around. And once in math class, somebody said to him, "Why do you have such an old car?" And he says, "Functionality is beauty." So maybe functionality is value when it comes to platforms.
I think that's right. And I think that that's been true of a lot of the sort of second tier protocols, which is that if there's a use case for your token, not just as an investment, but within the applications that run on your protocol, then that token is going to be very valuable. And we've seen projects sort of skyrocket in value. The one thing that I find sort of not difficult, but I'm a little conflicted on, I have cognitive dissonance on, which is that my view is that blockchain and these protocols holds the potential to create a more open, fair, private, and sort of transparent financial system. And I think that promise is still very much the case. But you cannot deny the fact that what this has done so far is create a number of extremely wealthy and powerful people in this ecosystem who, because of their own hard work or their own luck or their own conviction, were early and built stuff or bought assets in this space. Ethereum is a prime example. If you'd put $1,000 into the Ethereum token launch, it'd be worth 10 million today. So anybody could have done that, theoretically, anybody. But the reality is the anybody were people who are super tech savvy, who were already in this community, who knew about it. Now, that's a big improvement over the VC world where only the rich get richer. This was a way for transforming the fortunes of many people. But it has not yet actually achieved the promise of creating that more fair, more efficient, more equal, and more sustainable sort of financial system. That is a promise that is still yet unfulfilled. And so anybody who's patting themselves on the back about how big Ether is or how big their portfolio is ought to take a step back and consider how much more work is still left to be done.
There is much to be done. There are miles to go before we sleep, if we ever do. Don Tapscott here with Alex Tapscott for What's on Tap, available on your favorite podcast platform or on YouTube. We'll see you next week.
Take care.